I said the top 10 to 20 crypto assets will have an ETF in the next 3 years. That was my tweet. I stand by that. And I think the timing factors in that there's an election this year, that things are slower, and perhaps the next administration is more friendly. But we now have a Bitcoin ETF. We likely may have an Ethereum ETF later this year, an ETH ETF. That setup is just incredible.
If you are an Empire listener, hopefully you've played around on chain. And if you have done that, you know that transferring assets across different chains is a pain, to put it nicely. That is why we are incredibly excited to have the Wormhole Foundation as a partner of the Empire podcast, stewards of the Wormhole protocol, supporting over 30 different blockchains and 6 different runtimes. Stay tuned later in the show. We have a cool thing that you can claim, which is a Wormhole NFT just for Empire listeners. This episode is brought to you by PayPal. Here at Empire, you know that Santi and I are really into real-world use cases and always on the lookout for the next killer blockchain app. We're excited to share that PayPal has arrived in crypto to unveil a way to seamlessly connect fiat to digital currencies. Later in the show, you will find out how you can use PYUSD to check out at millions of online stores. And we're back. What's up, man?
Hey, how's it going?
Good. I can't tell the mood you're in today.
I'm in a mood. I'm not in a mood. I'm just this is the one of the funnest things I do every week. So,
Nice. What's going on? How's the week been?
Really good. Really good. Cycling. It's cold, but it's good. So
you back home?
Yeah, back home. It's good to be back and just have a routine for once.
Nice.
Yeah.
Awesome, man. Well, we had a crazy week, huh?
Yeah, it's always eventful. What has been going on? What's on your mind? What should we talk about?
I want to talk about a couple things. So you've been using Farcaster. I'd love to get your honest thoughts.
I joined Farcaster. I did.
You joined Farcaster. We got you. So I'd love to hear your thoughts on after having used it for a week. So that's one. Market's ripping, right? Bitcoin's sitting at 52 today. Yep. ETH is sitting at 28. Solana 115, right? Things are moving. So I'd love to hear your take on the markets, just where we're at. I'd love to talk airdrops. Starkware airdrop happened this week. Decent bit of controversy around it in terms of they did this basically thing where they, I think they started the vest 2 years ago and did a secret unlock that 2 years ago. People I don't know, some people really liked it, some people didn't like it. So we should talk airdrops, and I think that'll lead into I want to have a conversation with you about just how the funding markets work, fundraising markets work in crypto. And I don't think a lot of people understand what's happening in the private markets today with these kind of special rounds, venture funded rounds. So I want to kind of peel the curtain back on those. And then maybe we can get into a conversation about, there was a Chris Berniski tweet talking about restaking as leverage. And maybe we can open that conversation up and talk about it.
Yeah, sounds great.
Cool. I also will just say, I heard you guys' feedback about the DAS ads on this episode. So I think if our producer gets my message in time, we will not have a DAS ad on this episode. We're trying to make the ads more interesting. Ads are interesting in crypto because they don't work like traditional Web 2 ads, in the sense that it's very expected to have ads in Web 2 land, and in crypto, people are very adverse to ads. So we're actually working on some stuff at Blockworks to try to figure out how we can make ads more interesting. So anyways, we hear your feedback on the DAS ads, pulled them from this app, going to make them a little more exciting. Click the link. Santi, let's start with the market. So Bitcoin's up 16% week over week. ETH is up 17%. Solana's up 11%. Avalanche is up 18%. Market's cruising. We are now sitting at 52K, up from, at basically 3 weeks ago, Bitcoin was sub 40K. Bitcoin was sitting at 39. We're up to 52. Largely, I would say, driven by people are surprised at the flows of the ETF. And I think there's a couple of weeks ago, Chris Berniski came out and basically said, look, I think we chopped for a while. Some people obviously agreed with him because he's been so right for a while. Ari Paul came out and said, Look, I'm on the other side of, you know, as Arthur Hayes and Chris, you said, look, I'm tentatively on the other side of the sell the news meme. I'm betting against Arthur and Chris. I don't have much opinion on the macro side. View that as kind of a toss up over the next 3 months. But on the crypto idiosyncratic side, we see very low leverage levels, neutral sentiment, healthy market positioning. And he said, I think the pattern matching of the ETF approval to previous events like 2017 futures listing are actually bad analogies. All of those comparable events occurred far later in the bull cycle in context of a far greater bullish leverage and hype. In my opinion, we are in medium time frame bull trend. Prices likely higher in 6 months. So that was Ari's take, and so far Ari seems to be right. And I'd love to get your take in just like in terms of how you're thinking about this market today.
I've said it a number of times. Like it's really hard to be like you can be right in a week and then wrong in a month time frame. Over long time horizon, bull posting does incredible wonders because bears eventually get liquidated and die. And so, you know, it's I agree with the latter part of the sentiment, which is yes, I don't think this is like Bitcoin's at 52. There's nowhere near attention there on Bitcoin, even though we had the most probably if you were to go back since I've been in the space, if you were to ask me what would have been the biggest events that would solidify this as a asset class, it would be an ETF approval. We've had it, and it's been largely like a okay event. And maybe it's because we talked about it for so long that once it happened, it was a bit of a like baby blues kind of situation. But inflows continue to be really strong. We're nowhere near hype, and so that's I think really positive. Open interest leverage in the system doesn't seem to be as high as in 20 DeFi summer, um, and so I agree with that. Like I think we're in a prolonged bull market. You know, bull markets also exhibit drawdowns from time to time, week on weeks. Like you study every single cycle, you would have had moments in weeks where like the market was down 10%, 15%, depending on. And that's for Bitcoin and ETH. Now the beta on alts is even higher. So it's just important to like factor that in. And so like, yeah, it's pretty crazy that we have an ETF approval. Inflows are really strong, and we're debating if we're in a bull or bear market. Like, also, I just want to point out one thing. Every time I like try to time these things, I just remind myself of how small crypto is. And I'll give you an interesting stats here for all the AI folks out there. So Nvidia this year is up 44% year to date. So this year alone, Nvidia has added around 550 billion in market cap. That's a third of all crypto, give or take. So just whether you want to, I think it's a useful comparison because crypto is a drop in the bucket. So like I say this also because I don't think crypto is getting enough attention at all by traditional allocators. I from time to time ping some of the larger fund of funds, and the institutional allocators, at least in the Western hemisphere, are not touching crypto yet. And maybe we're doing that through an ETF, like registered investment advisors, to some extent. But alternative investments, like money flowing into hedge funds and venture funds in the space, is basically zero. So I think that's also a good barometer of where we are in the cycle. I think we're early, and it feels, putting aside all the macro stuff, geopolitical stuff, election stuff, this is a very small asset class. It is a real asset class. Just got an ETF approval. Now, I think one of the things that I was thinking about this week is there's no shot in my mind that we don't have at least 5 to 6 to 7 ETFs in a 2 to 3 year time horizon.
5 to 6 ETFs for different
like
assets.
the top, call it. I said the top 10 to 20 crypto assets will have an ETF in the next 3 years. That was my tweet.
Yeah,
I stand by that. And I think the timing factors in that there's an election this year, so things are slower, and perhaps the next administration is more friendly. But we now have a Bitcoin ETF. We likely may have an Ethereum ETF later this year, an ETH ETF. That setup is just incredible.
Yeah. Yeah. Yeah, I mean, if you I just showed that chart for anyone who's watching on YouTube, but if you look at this year, Bitcoin ETF flows are 4.1 billion. Gold ETF flows are minus 2.4 billion. I was trying to find the exact data. Some people had minus 2, some people had actually minus 5 or 6 billion. It's tough to find the exact number, but basically it looks like gold ETFs or capital in gold ETFs is now flowing into Bitcoin ETFs. And I mean, if you zoom out and just think about like the ETF flows so far are beyond the wildest dreams of I think Nick Carter said this well, like beyond the wildest dreams of any of the most bullish analysts. If you go back and read the analysts' predictions on Wall Street from November, December, and into early January before anything happened, what's happened so far is beyond the wildest dreams of any of the most bullish analysts. And if you I know you've talked a lot about like the sales orgs at these places. Like a lot of the asset managers haven't even activated their sales orgs, right? Like a lot of these financial institutions like BlackRock hasn't even like turned on their sales org when they're talking about Bitcoin. Like it's not like that's been rolled out across the entire company and like has been taken to it's still very, very early days. And yeah, it's pretty crazy. What do you mean when you say that the uh LPs the money isn't flowing into the venture funds in crypto yet? You're saying when they're a lot of them are raising and
Yeah,
they're having a tough
the,
time raising?
yeah, yeah, and fund of funds in the U. Based in the U.S. My question to them was like, "Are you getting interest from family offices, endowments, pension funds?" And they're like, "No, not for
Mm,
crypto." I think most people are just busy clipping, Nvidia gains and money market gains. Um, yeah, it was interesting. Also, Coinbase activity. They reported earnings this week. The stock kind of has done a since December has kind of went out all the way up to 160, down to 110, and hovered pretty volatile range. Um, JP Morgan, for instance, had a bearish call in the stock. They abandoned that. Um, Today, they're moving to neutral stance. Um, Again,
yeah,
I, I think analyst sentiment towards a stock like Coinbase is also indicative of like how the market's really thinking about it.
yeah,
Um, I think the reason why they were bearish is not just on crypto alone. It's the fact that like the ETF now allows people to just go direct and have exposure as opposed to having a proxy exposure through Coinbase. But nonetheless, I mean, I just think it's anecdotally a lot of banks are not even recommending buying the ETF. If they get interest from clients, they can purchase on their behalf, but they're not calling. They're not picking up the phone and kind of doing a boiler room operation of just pitching. At least the larger registered investment advisors, wealth managers, I don't think many of them are just proactively calling clients about this stuff yet.
yep,
And maybe Hunter from Bitwise, which they just crossed the billion, he might have a different opinion on what type of RIAs and like if you were to canvas the entire like Wall Street, apparatus, like who is really actually flowing, driving flows into these vehicles. I would argue that it's not the JP Morgans of the world.
yeah. If you look at I think this is a good barometer of how folks are feeling. So Y Combinator, the big accelerator, put out their request for startups. I don't know if you can see it.
Mm,
If you're watching
yeah,
on YouTube, you can see it on my screen. And they put out a bunch of. There's basically 20 requests for startups. Better enterprise, like better enterprise SaaS glue, eliminating middlemen in healthcare, a way to end cancer, AI to build enterprise software, LLMs for manual back office processes. Only one out of 20 of these was related to crypto, and it's stablecoins. It's number 15. It's stablecoin finance. And I did a little command F here for crypto.
oh, did you?
I did. I did. There's no mention of crypto in all of Y Combinator's requests for startups. So I think that actually is a decent barometer for like the sentiment from outside the industry. And I sent this tweet out and I stand by it. I don't think mainstream sentiment picks up until we hit all time highs, right? Like Bitcoin
That's
ripped
probably
through
true.
50K. First off, timeline's pretty quiet. Bitcoin ripped through 50K. Timeline was pretty quiet. Bless you. Uh, and
Thank
I
you.
got I got zero texts. I got literally zero texts from friends about Bitcoin hitting 50K. My guess
Mm.
is it gets crazy once Bitcoin hits 65 or 70K. Because at that point, anyone in the world who has ever bought Bitcoin at any time in their life is now in the money. And when you're in the money, you look at your account and you say, oh shit, I'm up a little bit. Let me start paying
Yeah.
attention to this thing again. So I think that's when it starts to get crazy.
Yeah, definitely. Yeah.
We're definitely entering phase 2 of the bull market though. It'll be cool to see. How does this impact how you think about like buying stuff and like allocating to the liquid markets? Because if you remember our episode 6 months ago, we said, look, there's actually a ton of opportunity in the liquid markets. And you had actually, I know you do a lot in the private markets. This was maybe 6 or 9 months ago. You said, actually, I'm having a lot of fun like looking at the public markets and buying
Mm.
things like that I think are really really cheap and completely liquid. How does this, like, numbers are going up, prices are getting back to near all time highs for some things. Like, how does that impact how you actually think about allocating just into the liquid markets?
Yeah. I don't know. I haven't really revisited my strategy as of late. Uh, I think probably like I want to skew more liquid over the next 3 to 6 months, 9 months.
You want to skew
Um,
more liquid.
yeah, yeah. I'm less certain about how 2025 is going to shape up. Um, I also think I don't know, like funds in the space. There's like some overhang where you have high watermarks, and a lot of them are trying to just like finally are coming up for air. I don't know how that plays in. I think one of the things that I'm going to be really paying attention to is how these, like Starkware is probably a good example of like pretty old project, been in development for a number of years. How does that trade, and how do VCs, the larger wallets that are getting their allocation, how are they behaving? Are they holding? Are they selling? And I think it'd just be interesting how that rotation happens. But otherwise, I mean, I still mostly do early stage, and I continue to just recycle money into early stage. Um, I'm of the mind that the things that I think more about is like categorically, am I over or underexposed to a particular sector or theme or ecosystem, and that's where I try to pay the most amount of attention. um, Inherently these things have a short duration, so I think of them like, while early stage crypto, yes, is kind of like early stage, the duration of it is pretty short, in the sense that I feel like I don't need to pay as much attention to. There will be a liquidity event most likely, where I mean you could have liquidity on something after 3 years, which is really short for venture, I think. But I care more about just, I think in this business you cannot miss a new a new trend, a new project. Like if you miss Celestia, well, how are you exposed? Like, do you have any exposure to modularity? If you don't have exposure to an ecosystem like Solana, well, are you in Sui or Say or Aptos or whatever, like paralyzed, chains? So I think these are sort of the things. Like, are you underexposed to gaming, overexposed to it? It's just sort of, those are the things that I think more about. Less so. You're right. There was a time where I felt that, like, it's good to monitor private valuations on average, like for seed, for A, for B, and how much money's flowing into that relative to kind of valuations of liquid tokens that may be teams that are farther ahead, but the token is just like really abandoned, right? Falling off the cliff off the top 100. So that's where I might find opportunities. I was doing a lot of that like over the last 6 months.
Is there a certain point in the market where you basically just say, hands up, like, prices are too high. Let me just sit. I'm allocated. Let me just sit right now, and I'll wait to allocate in the next market when the prices go back down.
Yeah, there is, and sometimes you go to conferences and you see a lot of exuberance, and it's like that scene from The Big Short.
Mhm. Yeah,
That's
sell
when
it all.
really easy money starts flowing in. I think it gives me. This is part of the reason why I don't like to go to conferences, because every time I go to them, it's I get I get that desire to sell, but I shouldn't, because
So,
if you
I mean,
hold for 5, 10 years, it's like, it's okay.
so here's a story for you. So I was I might have told you this already, so just stop me if I already told you. But I was sitting. So this was Breakpoint 2021, second week in November, and I was at the Multicoin party at
Pop.
Solana Breakpoint in November of 2021, which is basically like
Is that
the
at that
peak of.
rooftop?
Yeah, it was at the rooftop. Yeah.
Yeah, I was there.
Oh, dude, I didn't even
Hello.
realize that. Hello. I actually did see you later that night. I think at the Delphi at that
Oh, yeah. That was the
ridiculous
day after. Yeah, yeah. That was
ridiculous Delphi party. But okay, so I'm sitting next to Ed Moncada or Ed Moncada, the
Mhm,
founder of Blockfolio, who ended up
mhm.
selling Blockfolio to FTX, and he's just sitting in the back. And I go sit next to him. I was like, Ed, what's up? Been a while. And he goes, look at this. So I mean, I don't know if you remember, there's that wall of like 20-year-old kids who were all like MIT and Harvard dropouts, and all the VCs were like basically walking next to each of them, basically talking to them about their startups. And like kids were literally getting funded like on the spot at this multi-coin party. And Ed goes, look at this. He goes, see all this? See all of this? See those kids? See them getting $50 million pre-seed rounds? He goes, sell it all. Sell everything you own. And that night was the literal top of the market. So
Yeah.
yeah. Um, Okay, let's switch gears a little bit. So you mentioned is Starkware. So Starkware had an airdrop this week, STRK.
Yeah.
Um, I would say there was some controversy around. So I think they did a similar like distribution strategy. So it was I think it was like 12% grants, 10% foundation, 8% unallocated, 2% donations, 9% to the community, in rebates, 9% in community provisions, 33% to core contributors, and 17% to Starkware investors. So I think, you tell me if I'm wrong, I think that's relatively similar to how other folks like Arbitrum have done it. And anyways, they ended up launching on, so there's this platform AEVO that does like pre-market basically can tell you like what the price is, and you can kind of trade and go long or short pre the token going live. It was trading at like $1.75, which gives it an implied FDV of 17 to 18 billion dollars. For reference, the FDV of other L2s, and I get the whole FDV is a meme, whatever, but um, the for reference, so Starkware at 18 billion, Optimism is 16 billion, Arbitrum's 20 billion, IMX Immutable 6 billion, so it's trading around like in between basically Optimism and Arbitrum. So I think all of that was fair. All of that was fine. I think the controversy was that um, I should really pull this up so I don't botch this, but something along the lines of they did a secret unlock about 2 years ago to start basically they basically distributed the tokens quietly 2 years ago so that the vesting period would actually start before um, so
Hmm.
that if you're like an investor or you're an employee, you can actually sell instead of like basically getting that token when the token goes live, like everybody else. Then you have to wait. A lot of people do 4-year vest, 1-year cliff. Now they can actually sell it much sooner than other people. So I don't know. I don't know if you followed this whole thing.
Well, I was following it. Also, it was hard not to because there was very visceral reactions to it. Some people seemed to like it, other people seemed to not like it. And the meme, of course, was like, if you got the airdrop, then you liked it. If you didn't, then you didn't. But so, anyways, it was interesting. I don't know. I can't think of like retroactive airdrops have been a thing, but this when you call it secret vesting, it may imply that it was like not disclosed to some, but to others it was. But I yeah, it's interesting. I don't know. The FDV I think is a little bit out of whack, but you know, we'll see how. Let's take a normalized view, like over the next 30 days, of how this thing trades, right? But yeah, it's
Why do you think? Why do you think it's out of whack? Because someone like I think their TVL is like sub 100 million. Is that why?
not so much TVL. It's just what is it? 17 billion FDV.
Yeah.
I guess it's like right in line with an Arbitrum and Optimism trade. So
Right.
maybe it's not that out of whack, actually.
Yeah. Um, I don't know, but congrats to Starkware for
Yeah,
getting
I
this
mean
out the door. It's
they've
like
been on development since.
I've actually gotten to know their team decently well over the last couple of months, and I'm a big fan of what they're building and like super sharp developers. And like what they're doing with Cairo is like a very very difficult thing,
Yeah, yeah.
and a lot of developers really like it. Like basically choosing Cairo, I think was this tough as the programming language was like this
Hmm.
tough decision that will eventually be rewarded.
Hmm.
But my feedback to the Starkware team is the air bad airdrops don't actually matter that much. People move past them in a week. Um, and people move on to the next airdrop, right? Remember last week everyone's talking about Dimension, now everyone's talking about Starkware. Next week someone's going to be talking about the next thing. My feedback to someone like a Starkware and to teams doing airdrops is there's always going to be people who are angry with you and like these like airdrop farmers and things like that. There's always going to be thousands of those who are mad at you. If you let yourself get consumed in the emotion of like dealing with those people, and you snap back harder than they're kind of coming at you, it reflects really, really, really poorly on your brand. And I think Starkware got caught up on that. I saw some screenshots on Twitter of like some folks on their team like going off on people, and it's just a bad look that like then that actually reflects negatively on your brand for more than just the week that people are upset about the airdrop.
I
So
agree.
get your thing out there, make the announcement, write a really good blog post, and then shut the hell up for a week is my feedback.
Yeah. Yeah, it's never easy. I think airdrops, you're going to invariably alienate, cause some controversy. People that didn't, you never get it perfect.
Mhm.
But so, yeah, I mean, I think as good as any, I think, in terms of the allocation, the way the mechanism and whatnot. So I was surprised. I thought I was going to get a, yes. Like they mentioned some ecosystems like Immutable that you've gotten airdrop, and I checked some wallets and I didn't. So it was a bit odd.
Yeah, I had that with I had that with Dimension because I got some pudgies and I didn't I didn't get anything and I was like,
Really? Maybe the
what am I
snapshot
doing
they
wrong
took.
here?
Yeah, it was pre post snapshot, I guess, maybe.
Yeah. I because I
Pretty
originally I think I actually thought I had some at some point, and then I went back and checked, and I didn't have so anyways, doesn't matter, but, it actually brings up a bigger question of, like, we talked about these airdrops last week, and I've been thinking about that conversation a lot. I would love to just expand on, like, maybe peel back the curtain a bit on how on what's going on in the venture markets and, like,
Mhm,
how these things are actually happening, and I tweeted this thing out about ICOs, so what do you think of the way that the current system? So, okay, so for people who don't know, the way that the system is set up today. All right, so actually 6 years ago and 7 years ago, there was these basically the way that Ethereum went live was with this was basically with like the first ICO, or at least the first popular. I think it was actually the first ICO. It was like a crowd sale. And for anyone who was around in 2017, you probably remember the ICO mania basically. And every day there was a new ICO. It was essentially like chasing tokens and like kind of airdrop farming. Like everyone's chasing these ICOs, and there's a new hot ICO, and you would go on the way I did it was I would like go on my Ether wallet. You'd like go
mhm,
on my Ether wallet, and then there'd like be an ICO, and you'd send some ETH in, and you basically cross your fingers and like hope that like something happened on the other side. Hope that the ICO eventually went live, and then you would get those tokens, and then um, you would hope that that basically worked out. The ICOs ended up getting a really, really nasty reputation because for I would say two reasons. One
mhm.
is a lot of the companies and founders back then came in at the end of 2017 and they were just chasing. They were kind of quintessential scammy crypto people, and they were like not good founders. A lot of them were pretty damn crazy. Nearly every single person lost money on ICOs. Like it just was not a good system. The second reason it got a bad rap is the it was the 2017 version of leverage. So if we say that Genesis and BlockFi and those folks kind of pumped the market higher than it should have been in 2021, ICOs pumped the market higher than it should have been in 2017. And
Mhm.
the downside of this is that there was this basically cliff. The market fell off a cliff because all the ICOs had to essentially sell Ethereum to keep
Yeah.
funding themselves because you would send in your Ethereum, they would send you the tokens. Their treasuries, there weren't stable coins then, really, except maybe like Tether and stuff, but like they would denominate their treasuries in ETH because everyone thought number was continuing to go up. So now all these companies were sitting on a big bag of ETH. And to keep funding themselves, they kept selling ETH, which then caused ETH to go down. It was this nasty reflexive thing. So then what happened is all these venture firms were started. So pre 2017, there really weren't many venture firms. It was like maybe Pantera, who Blockchain Capital. There are a couple of venture firms. Then there's this huge wave of venture firms that raise money. Parify, Framework, all the classic ones. I think actually Polychain maybe was around earlier, but all the venture firms, Electric, Dragonfly, etc. Now the way that the venture world works and like how the fundraising market works is uh, there will be your traditional fundraisers where
Mhm.
you will lead like venture firm leads around or whatever you want to call it, and then in between some of these rounds, and especially pre-TGE, pre-token generation event, there's a strategic round, and that's when the company goes out and says, hey, look, we're raising at $1 billion from Andreessen, but you, influential angel, we'll get you in at 500 million, or flip those numbers. Hey, raising at 100 million, we'll give you a discount at 50 million. And basically, they raise from 50 to 100 angels, and it kind of gets the angels on their side, and they give them a discount because maybe the angels are more helpful than the VCs. And then when they launch, they can say, kind of when they do their token generation event, all the angels that they wanted to get, who are like maybe influential, are like on their side. Then the token launches, and it's this like mad dash for an airdrop. And it's like what happened with Starkware and what happened with Dimension, and it's a total shit show every single time for one reason or another. And the argument that I want to make here is that this system is actually a much worse system than ICOs. And ICOs weren't actually a bad system. It was just that the industry was so immature. There were no NFTs, there was no DeFi, there was like no infrastructure built out, that the reason ICOs didn't work is not because of the structure, but because of regulatory fear and subpar founders and subpar companies. And I'd love to hear. So that's my argument to you, and I'd love to hear what you think of it.
Um, yeah, this sort of train of thought is very similar to what Kane has been very vocal about. Kane, the founder of Synthetics, they actually raised one of the largest ICOs. It was probably the ICO that
Is that
peaked it.
Haven?
Haven,
Yeah.
yeah, I was an investor in there. And the question is, he was like, we should go back to ICOs, and I think it's a very interesting train of thought. Um, you also have people like Kobe trying to like disintermediate like this whole venture um, kind of you know PayPal mafia, if you will. Um, the so I don't I actually ICOs are very the purest form of a capital market where you have direct access to people. The arguments around not allowing that is that people are not very sophisticated. No, that's like accreditation rules that are outdated and antiquated, where they're actually based. So accreditation rules are actually set for administrative and cost burden reasons, not so much sophistication. Do you realize this? Like this whole threshold of like, are you making over 100 or 150K or whatever it is, or join
Mhm.
200? It's more so based on like back in the day, it like every time you had a new shareholder, like it required like it was expensive to add an incremental um, investor. Now it's like zero, right? It's
Yeah.
marginal cost
Yeah.
of zero with technology. Um, I think there is a middle ground where you go back to an ICO and you have, which by the way, a lot of it, I guess the question is, as long as ICOs and as long as in whatever mechanism, I'd say it doesn't matter if it's an ICO, a venture round, as long as there are the proper disclosures, the proper information propagated to the same people, like the same information propagated to everyone. I think that's, and some sort of standard of what is disclosed, right? I think that's the most important thing that people need to be aware of. And, but yeah, I mean, going back to the ICO era is something that is very interesting, actually. To like, is a venture investor more or less sophisticated than a community member? Probably the community member knows more about the project than the partner at whatever
Hmm.
name, and like allow them to. And in private conversations with a lot of founders, they've been wanting to do this. They've been wanting to go direct to the community, and because of course they get criticism. It's like, why are you doing a venture round? Like, we're here in the Discord, we're here adding value, we're here like contributing, and we can't invest. And it is a very valid argument. And unfortunately, it's been the regulatory risk and or concern. And so, um, the fundamental question is who's getting hurt. I think the current model, a lot of the retailers not participating in the value creation. By the way, in the same way that they're not participating in traditional venture, right? Um, which is a shame.
Yeah.
So I don't disagree with you. I would want to go back to that system because it brings more competition, right? It levels the
Yeah.
bar to maybe also get rid of airdrops altogether. Like
Yeah, I
it's
mean,
just like
air
I think airdrops have peaked in terms of the percentage that is being given to the community. If you go to a system where it's a pure ICO, you allow people to participate and have skin in the game, and that's it. Like it's a more competitive environment, and that's a really good thing, I think.
yeah. I mean, airdrops are so ICOs are better in two reasons. One is, um, they were better incentive alignment mechanism than airdrops. Airdrops are incentivizing the wrong people. Airdrops are incentivizing renters, not owners. And ICOs incentivized owners, people who actually wanted to like a stake in that business. Um, and I think basically like they also fixed this. I don't know. We're back in the like Web 2 era of like venture firms make the money, and then like the community makes like doesn't make the money. It's no different than IPOs, right? It's like, I
Mhm.
mean, you can make obviously money in the public markets, but like I don't know. I think that was one of the cool premises of ICOs is that like anyone could get in at an early level. And right now, like Starkware at 17 billion, like Eigenlayer, like what do you think Eigenlayer launches at? I'd say 25 billion minimum, probably 25, maybe 30 billion. Um, Man, it's gonna be tough for people to make money on that. And it would have
Yeah.
been cool if there was an Eigenlayer ICO that like people who are into staking and restaking and stuff could have got in. Now there needs to be things, right? There needs to be like I would say mandatory disclosures. There needs to be like there needs to be something. But I don't know this market structure of like VCs forcing private deals with discounts and lockups. Like I don't, it doesn't
Hold on.
seem like the right
VCs
one.
are not forcing that. The
No
current
one's forcing anything.
uncertain
The market.
regulatory environment is forcing it because there have been investors, well, not so much investors, there have been teams and founders that have been wanting to go back to this model, but they won't. Like it's just very challenged. Now, I think there's always going to be a opportunity to um like create a gated ICO. One interesting mechanism would be with proof of on-chain activity and measure of contribution, you invite people. Like think of Lido or Eigenlayer. With restaking, based on your amount of restaking, you have a certain allocation. And maybe you can get that as an NFT, that allocation. You can maybe trade that NFT to someone else at a premium or a discount if you don't want that allocation or you can't fill that allocation. And that naturally creates a secondary market all on chain. The problem, of course, is well, in order to get to that state, there is still a need, I think, for private capital or funding of a white paper, so to speak, and that was an ICO. Your point initially around like scams exist. I mean, it's important to like, I think, dissect. Okay, like scams exist everywhere. It's not that ICOs promote scams. Um, like scams will happen whether it's an ICO or it's a venture round. Like there's still scams. The ICO mechanism in and of itself does not, I think, promote a scam. I think if anything, it creates a more visible environment where like the issue is like there can be some FOMO, right? Because you saw a lot of that FOMO during the ICO boom, right? Um, and in the spur of the moment, like it's like no different than farming, right? Or maybe what we're going to have this year,
Yeah.
restaking, chasing of yield. People were really caught up, but that happens in every market. That's just like human psychology.
Yeah.
Um, in this environment where the market's open 24/7, 365, you see it more visibly. But to say that ICOs will like attract, like, are these facilitators of like crappy teams raising money? Like, yeah, like obviously it happens, but it's not the mechanism, I think. You know, um, I don't know. Like, I wouldn't be dismissive of an ICO for that particular reason. Is what I'm trying to say because I think
Yeah.
There will always be those type of opportunist founders, scams, whatever. It's just the nature of the game. It happens in crypto. It happens in other industries too, right? So, yeah, I just want to point that out because I think that's probably one of the biggest criticisms of ICOs that I keep hearing on and on and on. And it's like I don't think that's enough to go back to a model where it's a bit more, where it is more egalitarian, where it is more like perhaps meritocratic based on contributions, value made on chain, and it's really the same mechanism that teams are going about to design an airdrop campaign. You can use those same parameters for an ICO.
Yeah. Hmm. I guess one of the reasons they probably won't come back is there's this. Have you ever looked at the startup fundraising platforms like Start Engine or
Yeah,
I guess Kickstarter, you could call it this, like WeFunder,
yeah. Like you're
GoFundMe,
talking about an
like
adverse selection problem.
adverse selection. Exactly. It's like
Yeah.
the number one best founders are going to go to Verify and Framework and 10T and folks like that, and Polychain and the tier ones. Like the folks who aren't able to make it are going to go to the second class, and the third phase are going to go to the ICO platform.
Is
And
it
that's,
really?
I mean, like when I see a company on Seed Invest or Republic or GoFundMe, like what that tells me is you tried to raise money and you got turned away.
Yeah.
And now you're like, well, shit, I still need to raise money. So let me go like try to do a community fundraise.
Yeah. Yeah.
It's never the
There
first
are
option.
some instances. Yeah, no, I agree. There are some instances where like you might do both, right? Like it's not A or B. It can be, there is going to be this round. It's led by named fund,
Ah,
and
yes.
you
Yeah, yeah.
reserve an allocation that is an open mechanism where community members can bid on whatever curve or can just bid on the allocation. I think that would
Okay,
be a
so you know who
good
did
model.
this? Was actually Kraken. Do you remember in 2019 Kraken did a crowdfund? They raised
Yes.
13. So Kraken was raising at a $4 billion valuation. They raised 13 million. I actually think they did the crowdfund to put a price on their equity, but they raised 13 million from 2,000 investors, and they used some crowdfunding platform.
Yeah. Yeah.
I don't know who they
Yeah.
used, but yeah.
Yeah. Yeah. If you're a consumer business, this is also a good mechanism from a go-to-market perspective.
Hey everyone, wanted to give a big shout out to today's sponsor, Wormhole Foundation, stewards of the Wormhole protocol. If you are like Santi and I and you play around on chain, you know how bad the cross-chain experience is today. Well, Wormhole has set out to solve that, powering cross-chain transfers for over 200 different multi-chain teams, including some of the best like Uniswap and Circle. So what does that mean for you, the Empire listener? This opens up a huge number of multi-chain use cases across DeFi, NFTs, governance, oracles, and more. By supporting over 30 different blockchains and 6 different runtimes, including Sui, Solana, different ETH L2s, Ethereum, and a whole bunch more, that means you have now the most powerful interoperability platform at your fingertips. If you're a developer, you'll be excited to hear that Wormhole provides an extensive suite of tools and infrastructure so that you can securely build multi-chain applications. But don't just take our word for it, obviously. Wormhole Protocol leads the industry in all-time messages transferred with over 900 million cross-chain messages. 900 million, that is close to a billion, and that's a big number of messages. As a thank you, Wormhole Foundation is dropping exclusive NFTs. That's right. We got some exclusive NFTs for Empire listeners. Hit the link in the description to claim your unique Wormhole NFT today. The days of not using crypto for really anything in the real world are over. It is time to start using crypto in everyday transactions, whether that's shopping online or just buying a bagel on the street. We're excited to tell you about PYUSD, PayPal's entrance into Web3. PayPal is proud to share an open letter to the crypto community that outlines their commitment, their roadmap, and their goals in the digital currency space. PYUSD seeks to transform how you interact with your digital assets. Available today, you can send your crypto to your PayPal account, swap it for PYUSD, and then use it to check out at millions of stores. PayPal invites you, all the Empire listeners, to be a part of this journey. Hit the link in the description of today's episode to read PayPal's open letter to the community. It gives you a really good sense of what their vision is. Take the next step by signing up for a PayPal account today. The future of crypto payments starts with PayPal. Shall we talk restaking? Do you have thoughts on this?
I've been giving way too many thoughts here. I'd like to hear your thoughts on it first.
On
I do have
restaking?
some thoughts. Yeah, yeah.
Yeah, I mean, so basically, I'll read this tweet from Bernisky. He said, while we're still relatively early in the cycle, sneaky leverage always finds a new form. Oh, there you go. He says in 2017 it was ICOs, in 2021 it was the lending desks, in 2025 it will probably be rampant restaking. Um, so this sparked a whole conversation on Twitter. My answer to this is it depends how you define leverage. So in my mind the obvious answer is yes, this is leverage, but there's basically many types of leverage. Um, there's like operational leverage, and then there's financial leverage, right? There's like the financial leverage would be borrowing a bunch of assets to then like go long. Like that's like going levered long basically. Um, and so there's like two degrees of leverage I would say have to enter the conversation. It's like operational leverage and financial leverage. Then it's like the degree of leverage that you're taking, right? So if you or here's a question for you. If you stake your ETH, right? As a reminder to folks, staking is you take your ETH, you deposit into the staking contract. Restaking is you take that staked ETH and you deposit into a restaking contract. Do you think that staking is leverage?
No, not in and of itself.
Interesting. Why not?
Just the mechanism of staking does
Yeah.
not introduce more leverage. What you do with a staked asset may introduce more leverage, but in and of itself, staking does not introduce more leverage, right? I think.
Yeah. So this was okay. So I like read all these replies to Bernisky. This is why people weren't agreeing on Twitter, is because there's a different understanding of leverage. There's folks who think that depositing into a Uniswap LP pool is leverage. There's folks that think depositing your assets into a staking contract is leverage because you're doing something and you're getting more out with your money, basically. And people call that
Mhm.
leverage. I don't. I think I would call that operational leverage. I don't think it's financial leverage. I think that financial leverage is basically like the difference here is like, is anything being borrowed? So not like
Mhm.
like you're putting in one ETH, you're getting back one ETH and a little bit of yield on top. Nothing's really getting borrowed. In financial leverage, like you're putting down something and you're getting more back in return, and something's actually getting borrowed. So I think to your point, like restaking is basically it's a new instrument, like a new
It
financial
is a
instrument, or
facilitator for
it's
sure.
a facilitator of creating leverage. It's a new
Yeah.
derivative that can kind of or instrument that can then create leverage. That
Mhm.
would be my
It
definition of it.
Yes, I agree. It's there's a good FAQ from the Eigenlayer team. They put it out, I believe, 2 3 weeks ago. People should go read that. And they go sort of they make this point, which is Eigenlayer in of itself
Mm.
does not create, is their opinion, more leverage, more risk in the system. It is, but they do concede that it's these like liquid restaking tokens, and what happens at that layer is what may be a challenge, may present um, these risks. And in some ways, I think that is true, but also it begs the question, like, should you be trying to use the right word here? Should you have an opinion or a policy or risk framework in place to mitigate what the liquid restaking token does or does not do? And I'm not sure. I guess we could maybe discuss that, right?
I don't. Yeah, you're saying different parameters to limit what the restake token can actually do.
Well, not so much what it can or can't do. It's more the amount, right? Um, like if you're eigenlayer and you see the liquid restaking protocol come, and I'm just it, I'm trying to think of like, is there a framework in place that you can implement that like if you're eigenlayer, they have this kind of security council, right? Of containing the amount of like restaking on restaking on restaking. Can you clamp down on that? Can you like I mean, I guess I'm getting ahead of myself here. Is like, what is the worst that can happen with liquid restaking?
The worst that could happen is there's probably basically like a big slash. I think is that there's a big slashing event, right? Like I think mechanically staking and restaking are the same thing, but you now have multiple. You've now basically increased the number of claims on the same asset. So therefore, you've increased the number of like slashing conditions and slashing risks on the same asset. And I think that's why people would say, look, maybe it's not leverage, but it's increasing risk in one way or another. You know, it's not like you're taking out like a margin loan or something, but it's increasing some sort of risk in the system. Does that make sense?
Yeah, I'm gonna be cautious here because I am getting ahead of my skis. Like, I would like to have this discussion with someone at Eigenlayer or someone, and if we should bring maybe someone from Eigenlayer. Could be Calvin and someone from the liquid restaking token protocols to come in and discuss this. Like, is this point on leverage is a good one. I think that's like less contentious. What is more contentious is what is the point of all these liquid restaking tokens, and at what point do you stop? At what point you just assume that people are going to want to chase the highest yielding opportunities? At what point do we make sure that, to use this Chris word, sneaky? At what point do we make sure that leverage does not creep up on the system to a degree where it can have a systemic risk on protocols
Yeah.
or ecosystems?
Yeah, we've pushed the boundary of I think our or at least of my basically
Like, I have
intelligent
some
conversation
opinions,
here.
but they're
So
not really relevant
yeah,
here. I would like to more just have a discussion. Like, a pod in my mind would involve the top three liquid restaking protocols and someone from Eigenlayer discussing this point exactly. Because I think
yeah,
we had it in our predictions that if anything, like Ethereum, well, you remember when we had the Eigenlayer team on, they said like initially they're gonna have the security council that is gonna like really kind of make sure that the system is operating correctly and like these valid like they I think they call it the security council that is very like human centric governed and has an opinion on like the security frameworks of the system, right? Do you remember that?
yeah, yeah, yeah.
And my criticism back then, I think I still hold this view, is that like I guess you have to have that, but over time, like it doesn't give me much confidence. So like the whole point of these systems, I think, is to be like as uh governance light as possible. Like Ethereum as an L1 does not have any like, you know what I mean? It doesn't have any governance. Like I think you coordinating from a shift to proof of stake was a Herculean effort, and that required a whole bunch of coordination. But it's like very governance light. L2's introduced more governance in the equation. Um, and then protocols on top of that, like DeFi protocols and whatnot, are like have these governance tokens. But as a base protocol, I think you don't like you want to really, really minimize the amount of governance, human like interference or interactions that happen and have a say. Because I think that just degrades the trust guarantees. And I think also humans are like time and time again, like not really competent to make these decisions. So the my criticism was, I think Ethereum probably figures out some sort of scalability roadmap. It is figuring it out live, like through modularity and parallelization through some like Monad and all this, stuff like Celestia and whatnot. But it is adding more like it is giving up that this on this particular thing that I think is pretty sacrosanct, which is governance light. Um, and whereas you don't have that like in other ecosystems like Solana, for instance. Like you want it. And so yeah, it's just, is it going to work? Is it like a catastrophic thing? No, but it just introduces a vector that I think should be talked about more. um and ultimately it might be necessary, it's okay, but um I personally prefer systems that have as least amount of like human judgment in there, because it just makes me uneasy. You know what I mean?
I do, I do.
Just,
Um,
but yeah,
I
anyways, that was my rant on like Ethereum security, like scalability roadmap. But yeah, on this like liquid restaking stuff, I think we should have a dedicated pod to talk about this.
Yeah. All right, last conversation here. You joined Farcaster. You're 1 week in. What do you think? Good and the bad.
Farcaster, good stuff. Good stuff to Dan. I gotta say, I talked to Dan 3 years ago or so, and he was building this. And I've had immense respect for Dan from the sidelines because I know how early he was. He was early in Coinbase. I think he's a very deep, thoughtful thinker. And to see someone like take time to really like make a decision of where to build, like I think that carries a lot of weight and has a lot of gravity. It's a seamless platform. So starting from the very beginning, I ping you, hey, how do I set this up? You send me a link. I went through it. I set it up, seamless. It was Web 2 experience. Like there was some things about security and whatever, like you can, but it was very much seamless onboarding. Charge you $5, which is perfect. Like how much does Twitter charge you for verification? It's like similar, right? So it was like whatever. Very easy onboarding. So points there. Here's where I don't things that I didn't like, and I'll go back to things I like, but I'm going through sequentially the flow. What I didn't like was like it asked me for interest, and it was like 10 buckets. So I click some, crypto, books, travel, whatever. Um, and then I didn't realize this, but so I joined, and then I see the Empire channel. That was my first tweet, and then two things. One, I didn't like that I based on my interest, which is pretty cookie cutter list. I immediately followed like 70 people or 50 people. I'm like, no, make it optional. Why is it that like now it's the awkwardness of unfollowing people? Like, I don't want to, why are you determining who I should or shouldn't follow? Maybe give me a glimpse into the type of content that I'm going to be able to see, right? When I click into it, maybe just show me the channel. Also, show me how this goddamn thing works. Like, give me a guide of how I should be casting. It turns out that like, you know, it is kind of intuitive, but like it would be nice to just like have a here's how it works. Here's the kind of things that you can do here. Here's how it's different from X. Here's how it's very similar to X. Like here's the type of users. Like just give me something, right? It was just like, all right, like all of a sudden I follow 100 people. What I don't know. Like I actually don't want to follow these people. Have like I unfollowed like 80% of them. I'm like I want to consciously follow people here. Um, so that was a bit like I tweeted this to Dan, like casted this to Dan publicly. I was like, this should probably change. Um, so am I using the app constantly? No, not yet. Am I cross tweeting, like tweeting and casting the same thing? I'm running experiments of like where I do the same tweet and cast to see the type of engagement. Engagement's nowhere near, right? And I guess like the word engagement is like tricky, right? Because I'm just judging by like number of likes, which of course is like, you know, I have just shy of 1,000 followers on Farcaster. I have 100x that in on X. So I guess the ratio is pretty high, I'd say, but still, I don't know. I'm still kind of working through it, to be honest. I still don't know what casts are or how to do them or use them.
Cass, you
Maybe,
just send a tweet.
no, not casts, but like the frames, right?
Frames, yeah.
Yeah, the casts are easy. Like it's I'll say like it's super easy to just the cast, right? Like the same way that you tweet, it's like super intuitive. I guess you can select the channel. The question is if I select the Empire channel, is that can also go on like other I guess no, right? Like if you're not in the Empire channel, you may or may not see it. Probably not. The
You
algorithm
will
is gonna
still see it. You will still see it. I think the Farcaster team is thinking about something where like you could tweet out or you could cast in a channel and no one else would see it, or you can cast in a channel and everyone else sees it. But right now, when you like tag the channel Empire, so by the way, if people don't know, there's a on Warpcast, there's a channel for Empire. There's like 250 people in it, all listeners of the pod, and people hang out and ask questions and talk about the podcast. Yeah. So good times.
Are we
Good
the
times.
largest channel? No, we're definitely not the largest channel.
We're the
We're
biggest
like
channel on all of Warpcast.
we're
We're the
not, dude.
number one. No,
I mean,
no,
seriously, yeah, no, as much as I want to believe that, like
no. We have
not yet, not
250
yet.
people, and base has 100,000 people. So
Oh yeah,
I had a
actually that's pretty
cool,
impressive actually. Based on 100,000 people.
yeah, I had a cool Warpcast moment, Farcaster moment this week. So it was actually the best off chain, excuse me, best on chain to off chain experience I ever have ever had, and it was inside of a frame. And I think anyone who wants a peek into the future of consumer and the future of consumer crypto should literally go do this right now. So I was scrolling on Warpcast and I see a mint a penny frame from this guy Garrett, who works at CoinDesk actually, great guy, and he's been like basically he's been like sharing all the best frames that he can see. He's a good follow on Warpcast. So basically scrolling, I see Garrett share this frame. It says mint a penny. And the flow basically went like this. So you click mint a penny inside of your frame. It's just a big picture of a penny. Click mint a penny. The frame. So then I minted that NFT of the penny. The frame then automatically transitioned to say get a hat because it recognized that I had this NFT in my wallet. So anyone who didn't have the NFT in their wallet, it says get a penny. Anyone who has the NFT, that frame now says get a hat. So then I click get a hat. It then opens up a Coinbase shopping page with a picture of a $30, like really nice, like high quality $30 hat. And then the page automatically read that the Get a Penny NFT was in my wallet. So the
Mhm.
$30 hat on this like normal page, not turned into into a 1 cent hat. And then, so then I clicked checkout, and then it was one click checkout with Shopify and it was done. And this was all on mobile, all in like 30 to 60 seconds. Click mint a penny, frame turns into get a hat, click get a hat, opens up a Coinbase page, $30 hat becomes a 1 cent page, one click checkout with Shopify, hat's gonna be at my house in a couple days.
You gotta wear the hat
Super
and bot
clean. I'll wear that. I'll wear the hat. Yeah.
with hat.
With hat. I
With
am
hat.
now. With hat.
With hat. Wow, that's pretty interesting. That's really, I mean, yeah, this is a really good observation. Like people that are on the sidelines thinking that it is crypto is still very cumbersome, challenge UX. It is. They're in for a surprise,
Yeah.
a real surprise. Like it is
Yeah.
seamless. I've always felt that payments subscriptions with stablecoins is the way of the future. Like NFTs as subscriptions. Like I'll leave you with this: the amount of dropout, the amount of like lost revenue from e-commerce is astounding because credit
Mhm.
cards fail or like subscription renewals is a huge problem for not just retail but the enterprise software companies. Like because the credit card expired, the payment had a false negative. All these like crazy stupid things that should have been figured out by now. Guess what? You don't have that problem with crypto, and you can make micro payments. Like it's just streaming payments. Savalier is a really good protocol. Like it's just yeah, like we're you're right. It does this type of flow is something that perhaps we should really encourage people to use more and more to showcase to normal people in their day-to-day interactions of what is possible with crypto.
Yeah.
Right.
Yeah.
Like it would be nice to see a video of like, here's how you check out in normal web 2, here's how you check out with crypto. Who's faster?
Yeah. Yeah, we have a monthly all hands with Blockworks that Mike and I lead. And I think we have like 60 people at the company, maybe 65
Wow.
now at Blockworks. And we just have everyone get on once a month. We share like basically how did the last month go? What's happened? What are the goals for the next month? And like, what are the big initiatives at the company? And like, what are we thinking? And then there's like a AMA section and stuff like that. And we did a whole section on Farcaster, and we basically said like, look, as a company, it's not just Mike and I. Like as a company, we're pushing into Farcaster, and we've got like a Farcaster channel now, and people are we're like we're pushing on it. So
Yeah, it's
I
really
think
good to see
anytime you
that,
do
man.
something like this, it's you will never be successful with a new thing if you just half-ass it. So, like, my
No, you have to
idea
yeah.
around Farcaster is, like, let's go all in for 90 days, and let's wake up maybe, 4.5 months, and we'll wake up at the end of June, at the end of Q2, and basically say, "Do we keep going or do we stop? Was it worth it or not worth it?" So,
Yeah.
yeah.
I think it has those type of bets are really interesting from when founders do that because it could have a pretty asymmetric payoff and the downside fairly limited. I mean,
Oh,
like, what's
this
the
was
worst
the
that can
other
happen?
idea, like, if you we have yet to actually get on TikTok as a business. We have, like, a
Oh,
couple videos because and we should probably be on TikTok, but to go create like TikToks in a channel, like you can't just repost somewhere. Like it literally takes a different type of person to go build a
mm,
TikTok. But Warpcast is really easy to just like we can take the team who
cross
runs our
syndicate.
Twitter, and now that Twitter team, it's very easy for them to
Yeah,
get
yeah,
up on
they can.
up and running
What
on
is called
Warpcast.
cross syndication of channels.
Yeah, yeah. So
Nice. Good, man.
yeah,
Well, something to obviously report back on, um, and keep tracking. But yeah, really shout out to Dan. I mean, he's really good stuff what he's built, and
yeah.
we need more of those. We need more consumer applications, and I think we're entering that phase. I think that is the most exciting way. Going back to circling, this podcast is really about this discussion around like who fucking cares if who's right around a couple of weeks if we're in a bull or bear market. Like again, the real fundamental question is, do you believe this is a lasting technology? And if you do, you kind of invert. Then does your timing matter? No, because you're never going to get it right because humans can't predict this stuff and markets are completely irrational at it. And so you can't do it. To think that you can is just a fool's errand. You're going to be right today. Chris is going to be wrong, quote unquote, today. He may be right, in a month from now. Who cares, right? Like at the end of the day, more focus should be on paying attention to what is really happening on the ground level. You're trying out Farcaster. Like compare that to your experience in 2017 when you were funding that ICO. Crypto's not perfect, but like, do you see a window towards this completely changing the fabric of e-commerce and subscriptions and customer acquisitions and retention and what? Like, yeah, I do. Like stablecoins, have you used it? Not just like pontificate. Have you actually used stablecoins? Like, okay. Like, have you tried Phantom? Have you tried Jupiter? Have you like looked at an NFT and what people really like? I get like that maybe gaming is a little bit more like bare bones still, but like every different kind of vertical is in different places. But in the aggregate, like I that's what I care most about, right? Because that's how I think of my allocations in verticals. Is like I cannot afford to miss out on a huge vertical. And social is one where I've like probably kind of been a little bit wary of. Like I obviously have an investment in Lens. I'm not an investor in Farcaster, but seeing this type of stuff is really encouraging. Actually,
Yeah.
the question is, are they gonna will they be able to scale? But it's also really kind of crazy, right? Like you look at these like examples that are made, like Harvard Business School case studies, vitamin water, coconut water, all this crap. It literally was like Rihanna and 50 Cent got behind this crap and like it went.
Yeah, 50. Let's go.
You know what I mean? And like 50
Yeah.
Cent would have been going bankrupt had he not done this deal.
Yeah.
And then Rihanna's a billionaire because she like got like a huge equity stake in coconut water or something like this. Yeah, it's the thing is like what is really encouraging is the creator economy, to use a cliche like kind of overused VC term at this point, is very real.
Yeah.
TikTok, these phenomenons like the individual power of not just celebrities but genuine people that like are content creators is huge. What is probably missing is how these creators monetize, and I think crypto is that place where more and more creators are going to naturally gravitate to through NFTs, through whatnot, and because it is just a better system. I think
Yeah.
you're still going to have platforms, you're still going to have like TikTok, of course, that are more centralized and whatnot. But when you compare the economic argument for a creator is going to probably be stronger joining a Web3 protocol that distributes a far greater share. So my guess my last question for you is when will we see most of Farcaster users, which has gone parabolic, I think, didn't it cross like over 100,000 or so?
Well, there's 100,000 followers of just the
A
base
base.
channel.
Yeah, but I think it's over 100,000. Mostly crypto native, mostly historically Ethereum centric. But when do you think we're going to see like major mainstream? I don't want to say like a Taylor Swift, but like like a Mr. Beast or whatever on Farcaster.
This cycle.
Do you think? Yeah, is that going to be a bullish or like is that going to be the topish
It'll be
signal?
in the it'll mark the top or something, and then like
Okay,
yeah, I think at some point in 2025, like I think dozens, I think many celebrities end up getting on Farcaster in maybe 10 to 20% chance second half or end of 2024, but definitely in 2025. I mean, I don't know what your like. It also depends on how you think about the cycles, but
imagine if
like
Trump goes on Farcaster.
I
Man, if
wouldn't.
I'm
I mean,
Dan,
like I think
if I'm
something like that.
Dan, if I'm Dan, I would be like focused on like capturing this election. Like if you have like, because obviously Trump got banned from Twitter.
I mean, I think that will happen in this cycle. Like, I think you'll be listening. Like, I don't know if you ever listen to the Lex Friedman pod. Like, I think crypto people will end up getting on as crypto gets intertwined and Bitcoin gets intertwined with like more and more of society, and like the market ends up ripping and bull market and stuff like that. Like, those celebrities will get on Farcaster, like crypto celebrities, like the big founders and investors will get on Lex Friedman and get on 60 Minutes, and will get called to talk in front of Congress and things like it'll all just get intertwined. So yeah,
Yeah, yeah, absolutely. Well, we'll see. I'm going to
we'll see.
continue to use it. So thank you for this activation energy that is so necessary. So
Let's
I will
go,
always credit you for onboarding me to Farcaster.
dude.
Is
What
there
about
is there
oh, go ahead, go ahead.
is there an NFT that like can track who onboards? I think you're with your ref link. You can trace, right? They know
I
that
think
you
you can.
sent.
I think you can trace who has
Yeah,
signed
because
up with
you
your
you
ref
sent
link.
me a link and it had a unique URL to it.
Yeah,
So
I
yeah,
think you can trace.
by default. Yeah, yeah, nice.
Yeah.
Good stuff. We haven't done this in a while. Any content, movies, books that you're listening to, found interesting lately?
I have not opened a book in 3 weeks, and that's how
Bull
I
market.
know that we're
Bull
in the bull
market.
market. Yeah.
That's
I
exactly right.
mean,
I was going to say that.
it's crazy. Like, the podcast in the bear market that I was listening to, like, I started listening to, like, non-crypto podcasts a little more in the bear market just by the end of the bear. Like, I just like audiobooks. I was reading a little
Uh,
more, like, I was listening to, like, just, I don't know, back listening, like Invest Like the Best or All In or My First Million or, like, these other podcasts. Now I'm like
like hear
0x research.
stories of people how they almost went bankrupt like you in crypto, and then they come back in full raging
Right.
force, like and give you some. Yeah, we've been there. Yeah.
That's right. So yeah, exactly. I'm like, oh my god, like he was almost bankrupt too. Yeah, I
Yeah,
can I
like
can make it.
guys, Elon Musk went almost bankrupt twice. Like, so like if
I'll be
you've
Elon. Yeah,
if
exactly.
you've round tripped your crypto gains, like hold on,
Hold
we'll
on.
make
Yeah,
it.
exactly. So,
We're
but
all
no,
gonna
now
make it.
like, dude, I wake up Wednesday morning and I'm like, let's fucking go. I get to listen to Zero X Research podcast. Like, all right, Friday morning or
Oh,
like Saturday, like I get to listen to Bell Curve.
yeah.
Tuesday, like new episode of Bell Curve. Like, so
I
I'm
think
it's
one of our first conversations that I had with you, and especially when I was looking at the investment, was like, you're right. Like now, you rotate from hopefully you're listening to Empire, and then you can go to Lightspeed, and then go to Bell Curve, and then come back to Empire. Like it's a full week, and then we have the convo now with Ryan and Tommy. Like I think our initial vision was like becoming your everything. If you want to,
we
like,
we want to own the
yeah.
we want to own the stack. We want to own the entire information stack for once you are crypto native, basically. Like, we will let other people, the CoinDesks or Cointelegraphs of the world, like play with the onboard people into crypto, whatever.
Mm,
Our theory though is that like you only spend a little bit of time on that layer of the stack, and eventually you get pulled into crypto or you leave. And we care about the people who are here to stay. We care about the,
yeah,
as Ryan from Bankless would say, like the settlers. Like, we care about the crypto natives, and if you want news, we've got news for you. If you want a daily podcast or daily newsletter, we've got that for you. If you want more niche shows, more technical shows, we've got that for you. If you want to come to conferences, we've got that for you. We're launching Permissionless 3 in 2 weeks with
totally
over 50
exciting.
plus speakers. We're excited about that. Like, yeah, we
Right.
and then we've got the research and data platform now where we're launching a full, like, we literally rebuilt this thing based on customer feedback from the last 21 months. We've
Mhm.
rebuilt the entire platform, especially the front end, and we're launching that in about a month. So yeah, like we want to own the whole stack.
This was an ad without being an ad.
We are
So we
not
want to do an
fundraising.
ad without being an ad. So,
Just all I
really
could
good
ask
stuff.
you is go buy a ticket to DAS. Use code
Totally different.
Empire10. Not an
Yeah,
ad.
I think there's an event for Empire listeners and community
Oh my
members
god, thank you.
on Sunday.
I
No,
was
no,
literally,
I'm the reason I'm. How is it that I've like no, bringing
dude.
this
I
stuff?
literally forgot
Okay.
3 times in a row to bring this up. We have actually.
But
You
but
wanna
but
share the details?
well, like I'm cautiously going to share them because I'm still figuring out my travel. But there is an event. The conference starts Monday, the 18th, right, or something.
Yeah.
18th or the through the 21st or so. It's like Monday through Wednesday or Thursday, and there's a meetup on Sunday before the conference starts for Empire and Bell Curve
On the
listeners
margin.
on
Empire
the
and on the
margin.
margin. So it's gonna be Mike, myself, Usco, like Empire and on the margin listeners can come. The only way you can get in is if you have a DAS ticket. But yeah, if you're in London, you're going to DAS and you're a listener of the show, come hang out. Beers on Blockworks.
Nice pints, you mean?
Pints. Cheeky pints. Yeah. It's also Sunday roast day. Yeah. I got to get a little Sunday roast.
You got to get on the program.
Get on the program. Yeah.
All right, lads.
Lads.
Anyways, yeah, always good to come on the pod. Thanks everyone for listening. We will record. We got a good lineup. We got a regulatory pod coming tomorrow. I recorded that with Rebecca. And
we have a CEO of Marathon Holdings actually dropping on Tuesday. Fred Teal, public company. I think it might be our first public company guest. It was the first Bitcoin mining episode we've done in almost 2 years. I would really recommend listening to this episode. We never talk about mining, but like very good overview of what's happening in mining.
Yeah, very relevant too, because the halvening's coming.
Yeah. So we got some banger episodes coming on. Thanks for listening as always. Hopefully see you guys in London in like 3 to 4 weeks. And we'll see you next week.
Keep the hat on, folks.
With hat.
With hat.
Cheers. Hey everyone, thanks for tuning in to today's episode. Don't forget to claim your free Wormhole NFT exclusive to Empire listeners. Hit the link in the description of today's episode and fill out the form to claim your unique Wormhole NFT today.